Welcome friends. In this video, we will analyze when will Xcn coin fall end. Don't forget to subscribe and like, and please watch to the end to understand. When we look carefully at the current price movements, we can observe that it is under the influence of a prolonged downtrend. Downtrends in the market usually indicate that selling pressure is strong and investors are cautious. However, no trend lasts forever, and a break in a downtrend can lead to significant shifts in price action. This downtrend, which price is currently in, is critical in determining the direction of the market. In terms of technical analysis, breaking downtrends is considered an important signal for the start of a new uptrend. Currently, the price is moving close to this trend line and occasionally touches it and meets resistance. However, the more the trend line is tested, the weaker it becomes, and the more likely it is to break. So if the price manages to break this downtrend to the upside, it will be a strong signal that the market is changing direction. However, it's not enough for the price to simply break the trend line to confirm a trend reversal. For a true trend reversal to take place, the price needs to test this level as support after the breakout and hold above it. If the price breaks this level and maintains its upward momentum, the uptrend is likely to accelerate and a new trend is likely to form. Also, the breakout of downtrends should usually be supported by an increase in volume. A breakout on high volume indicates that buyers are entering the market strongly and the uptrend is on firmer footing. If the breakout occurs on low volume, it could be a bull trap and the price could return to the downtrend. Therefore, it is very important for traders to pay attention not only to the trend breakout, but also to the volume indicators. If the price breaks this downtrend and manages to stay above it, a new bullish period may begin in the market. In this scenario, the price may test the previous resistance points, gradually moving higher. For traders, such breakouts offer significant opportunities, as being at the beginning of a new uptrend means higher earning potential. But we need to look not only at trends, but also at other metrics to see if the decline will continue. Stay tuned. At the moment, a detailed analysis of the price action shows that a distinct Elliott wave structure has not yet formed. However, if price action forms the first and second wave here, this could be an important turn signal. Because according to Elliott wave theory, the third wave, which is the strongest wave that determines the main direction of the market, usually starts after the completion of the second wave. The third wave is known as the wave with the greatest momentum and the sharpest rises in the market. Therefore, the first and second waves that may be forming right now could potentially be harbingers of bullishness, especially if the price is currently moving through a support zone or a horizontal consolidation. It may start to form an Elliott wave structure as soon as it breaks out. For the first wave to form, the price needs to react strongly to the upside and break through the current short-term resistance levels. The second wave that follows is usually a correction wave. The depth of the second wave will indicate how strong the market is in a buying zone. If the second wave is not too deep and reacts at a strong support level, it is the ideal backdrop for the third wave. Since the third wave contains the strongest and most pronounced bullish move in the Elliott wave structure, traders often try to follow and catch the third wave. If a structure like the one we are drawing now forms, and the price makes a strong upside breakout after completing the second wave, this would be a strong signal that the market has entered an uptrend. Also, the volume needs to be supportive for the third wave to start. That is, low volume may be seen as the price forms the first and second wave, but at the start of the third wave, buying volume is expected to increase rapidly. If there is a significant increase in volume at the start of the third wave, this indicates that the uptrend is based on much more solid fundamentals and increases investor confidence. And also, after making the second bottom, it should not go below the Elliott starting point. If it does, the Elliott count will be cancelled. Looking closely at the price action, we can see that there is a very critical support level in the lower area. This support level is an area that has been confirmed by past price action and has remained strong despite being tested many times. In technical analysis, support levels are considered to be areas where buyers are concentrated and offer resistance to the price's decline. Therefore, the price reaching this level can be a very important signal for market participants. If the price reaches this critical support point and receives a strong buying reaction here, a new bullish wave may begin. Because technically, reactions from support levels are considered strong turn signals in the market. Such important support levels are usually where large investors and institutional buyers are active. In other words, large volume of buy orders are expected at these levels. If the price moves upwards with increasing volume when it hits the support zone, this indicates that buyers have stepped in and the uptrend may begin. Conversely, if the volume remains low when the price hits the support level and a sideways movement occurs here, the support zone may be at risk of breaking. At this point, how the price will test the support level is also a very important detail. If the price hits this level with a sharp decline, there is usually a strong reaction and a rapid rally may occur. However, if the price is approaching this area in a slow and low volume move, it may determine its direction after consolidating in this area for a while. Especially in such sideways movements, volume indicators and other technical indicators can come into play and provide more information about the direction of the price. Besides, depending on the price's reaction from the support level, the next target zone can also be identified. If the price initiates an upward movement from here, it is expected to move up to the nearest resistance level first. If this resistance level is breached, a bigger bullish wave may start and the price may reach higher levels. However, it is also possible that selling pressure may increase once the resistance zone is reached, so it should be closely monitored how the price reacts here. We should wait for it to give us a turn signal. The RSI indicator is one of the most commonly used indicators in technical analysis, helping us understand whether the price is in overbought or oversold territory. But it's not just limited to that. It's also a highly effective tool for determining the direction of market momentum, whether it's gaining strength and potential trend changes. Right now, we can see a clear short-term downtrend in the RSI, indicating that the market is under current selling pressure. But there is an important point here. If the RSI breaks this downtrend to the upside, it's quite possible that the price will similarly break the downtrend line. In technical analysis, trend breaks in the RSI are usually considered as leading signals for price movements. So, if the RSI is able to break through the current falling trend line to the upside, this could indicate that the market is regaining momentum and buyers are starting to gain strength. This breakout in the RSI can be considered as a sign that the price will break out of the downtrend. Therefore, how the RSI moves at this level is of critical importance. If the breakout occurs, it could start a positive turn for the market, which could set the stage for an uptrend. Right now, we see that the RSI is at a critical point. If it can break this falling trend line to the upside, the price is expected to move similarly to the upside. This is because the RSI is generally considered to be an indicator that predicts price movements several steps in advance. Especially if the RSI breaks above the 50 level after the breakout, it will be an important signal that the market is gaining momentum. This is because the RSI below 50 indicates that the bearish trend is dominant in the market, while a rise above 50 indicates that bullish movements are gaining strength. However, it's also worth paying attention to other factors that support the RSI's breakout. For example, an increase in trading volume is of great importance. If the trading volume increases while the RSI breaks the falling trend line, this indicates that buyers are gaining more power in the market and the price's uptrend is on a firmer footing. Otherwise, if the trading volume remains low, doubts may arise as to whether the breakout is sustainable. Therefore, when watching whether the RSI can break its downtrend, the trading volume should also be considered. In addition, the support and resistance levels where the price is moving should also be taken into consideration. If the price hits a strong resistance level when the RSI breakout occurs, the price may experience a short-term pause at this point. But if the resistance zone is breached on volume, the price can be expected to enter a stronger bullish wave. If the RSI breaks this trend, the price will break the downtrend. Yes, folks, let's get like this in this video. Don't forget to like the subscriber event. See you in the next videos.